Hello. Okay, we'll start our lesson, and as earlier I discussed with as well, 3.1, we are discussing about describe the station and administration procedures. So indirect tax, which is we charge in other countries called GST, we call VAT, value added tax. So normally the final customer is paying the VAT administered by the HMRC and collected VAT registered trader in the course of their business. And we also discuss about inductive contents as well. We explain what we're supposed to do, and now we discussing about 3.1. So value added tax, which is yes.
My doubt was when you can charge input taxes, you can also reclaim input tax on expenses that from HMRC.
Yes, so all input mean any expense toward the manufacturing goods. We are manufacturing, let's say we are manufacturing company, we provide services, or any other company, we can claim any expense which we paid VAT, like on the gas, electricity bills, on telephone bills, or various other mobile bills, mobile phone, we pay GST, so that's we can claim. But if we charge when we're selling the things to our customer, and that VAT we charge from customer, that's we have to pay HMRC. Basically, we pay input and output difference to HMRC. Any question?
Yeah.
Okay, next we're looking now. VAT applies to the taxable supplies of the goods, and taxable mean those are under the rules we have to charge the tax. Then we have a different rates. We call standard rate is a 20%, which most of the things we charge 20% VAT. Some we have a reduced rate, like domestic gas electricity bills in the UK is a 5% VAT. Value added tax is a 5%. And some goods we have a zero rated, which is no VAT we pay, but we count toward the turnover. Yes, which will be fall in the figure of 85,000. So taxable supply charge output tax and can claim input tax. Exempt supply no chargeable to tax. Exempt cannot be registered and cannot be reclaimed as an input tax because it's exempt. Yes, you're not paying it. You can't claim it as well if you're not paid it. So registration and deregistration. So registration must be registered within 30 days end of the month if the value of the taxable supply exceed the registration limit. We have a registration limit which is 85,000. Yes. Must register without delay at any time there is a reasonable ground for believing that the value of the taxable supply exceeds the registration limit within 30 days alone. A trader can be choose the VAT registered even though the supply won't fall in the registration or the below the registration threshold. Input VAT can be claimed. Disadvantages. Administrative burden. Sometimes you have to keep a record, can be a problem. Possible penalties can be if we not properly submit the return. And non-VAT registered customer can be disadvantages. And the current examinable threshold was 83, but now we have 85 in this tax year. A trader making mainly zero rated supply can be applied for HMRC to be exempt from the registration. Any question?
No, this is fine.
Okay, next we're looking, as we discussed, registration and deregistration. We have to register 85. And we can deregister ourselves on 83. Does the business make taxable supply? Yes. And taxable supply will be 85. Within 30 days will reach the limit. We must register. Do taxable supplies to be date maximum 12 months exceed 85,000 turnover? Yes. Then must we need to be registered. If no, no required to be registered. If we not supply taxable supplies cannot be VAT registered, yes, because we're not supplying it. Okay, voluntary registration. Supplier can be registered voluntary if the taxable supplier the following 12 months will not exceed 83. If it is not exceeded 83, we can register still voluntary, because some we selling zero rated, some we selling uh, standard rated, yes, some we selling maybe reduced rate. So threshold exceed temporarily, trader can apply exemption from the registration if they can demonstrate that the threshold has been exceeded only temporarily, yes.
Yeah.
Failure to register, if we fail to register, HMR can see the penalty, yes, they can recover the VAT. Okay, I copied some e-learning, yes. So what you need to do, you can copy this link and you can start, yes, like what is what is meant by, so there are some questions, yes, voluntary registration, record keeping, so that's please, it's good to play with, yes.
Yeah.
And it's a self-learning document. Any question there?
Could you go back to the slide for the one with slide number 15?
This one?
Yeah. Yes. How can supplier deregister voluntarily if the value of taxable supplies will not exceed 83,000?
Okay. If the value supply not 83, let's say you're selling worth of 50,000 goods, yes?
Yeah.
But you on the purchase you paid the tax, yes?
Yeah.
Then it means you can register with the HMRC as a voluntarily. It's not a compulsory. It means the VAT you paid it, you can claim back, yes?
Okay. So with that you can reclaim back your
Yes,
tax.
you can reclaim. Otherwise you can't.
Okay.
Okay, that's the registration and deregistration. Next, we're looking the tax point, yes? So tax point is a point when we need to pay the tax, yes? Or
Yeah.
which period we need to count. So good date on which the good removed and the made available to customer. We count that basic tax point is the point when the goods available for customer, yes? But
Yeah.
if we deal with the service, yes? Service like we doctor services, yes, we provide cleaning services or various other accounting services. VAT only be charged if you provide the services, you complete the service, yes.
Yeah.
We not charged before. Actual tax point is the date of invoice issued or payment made if before the basic tax point. So we issue the invoice, yes.
Yeah.
And we not deliver, if we deliver the good within 14 days and we count that point, that date will be count towards our tax return, that figure we can include it. Alternately, if earlier tax point is not used, the invoice date if issued within 14 days after the basic tax point. What is the basic tax point? Basic tax point is goods removed or made available. We said good is ready to dispatch, yes, but the customer never picked it, yes. And after this, after the available date, we within 14 days we issue the invoice. Note the invoice date will be my actual tax point, yes. So that's all about. In the next slide we'll further explain. So there may be two tax point when the deposit is paid and one deposit and the other for the balance. So tax point on the deposit is often the payment date is usually occur before the delivery. Let's say you paid the advance payment, yes?
Yeah.
but the goods being delivered later date. But when you receive the payment after that and you deliver the goods within 14 days, the payment date will be the count as a tax point. Okay.
Sorry, I didn't understand the last part.
Tax point mean the date which we should be include in the tax, because some maybe goes in this quarter, some invoices will go next quarter. That's only the point, because normally we do quarterly returns for VAT. Pro forma invoice have no impact for the tax point. Wait for the real VAT invoice before they determine the tax point. Pro forma invoice is a simply invoice. I'm not giving a lot of details. Yes, I can put just total amount. If the amount is around 650 pound, if it's more. So we have a e-learning again on the tax point. Is good to be learned, and we can copy this link. Yes, again, and like I showed you other, and I'll show you this one. It's quite good, because there are some, and we can make mistake, no problem, but we can learn through this. So we can click there, we can continue, and we can reference material there with all their attachment, and then we can say sale of non-registered customer. What will be tax point? We look the dates. Yes, your business supply goods to customer whose is not registered for the VAT. A sequence of events. Identify the tax point for the transaction by selecting the correct. 1st October order received from customer. What do you think? That will be tax point. On the 10th October, goods sent to customer. Yes.
Yeah.
So we send goods on the 10th October, and we issue invoice. When we issued invoice?
We issued invoice on 20th October.
So which date will count towards tax point? What do you think? Which one we take?
12th October.
20 October. Because the customer received goods when they received it. Yes.
Yeah, 12th October.
So 12 October. Yes, received by customer. So goods sent. And
so tax point is basically when the goods leave the business towards the customer.
Yes. So when goods available. Yes.
Yeah.
So that's we need to. At the end, we'll show all the answers. It will carry on doing like this. Yes. At the end, show me all the answers. I can go through again. So it's quite good. We can go through once, twice.
Yeah. Okay.
It's more self-learning. So next we looking now. We have 3.2. Complete the tax under the different VAT scheme. For the small organization, we have a VAT scheme. It's called annual accounting scheme. Annual mean you do one return instead of 4 return. If you have a business, small business, and the turnover is 1.35 million. Yes.
Sir, the screen is showing the VAT invoicing tax points.
Oh, okay, sorry. Just need to change. Is it okay now?
Yeah, now it's okay.
So if your turnover is 1.35 million, excluding VAT, yes, that turnover is excluding VAT.
Why is it excluding VAT?
Excluding VAT means there is no VAT figures include, in the turnover, yes.
Okay.
So turnover means sales, yes, sales value without VAT. So then we can register for this scheme, and we can stay on this scheme until our turnover is 1.6 million.
Okay.
And end of the month, 4 to 12, yes, end of the month, 4th and 12th, pay 1/10 of the previous liabilities of the balance of the VAT within that return. So when we submit it, yes, we can make some payment advance, and other we can make the arrangement as a tax as a direct debit. Then we have this scheme have advantage only one return, payment speed spread evenly throughout the most of the year. Disadvantage, monitor the supply to ensure that turnover limit not exceed. If you exceed, HMRC don't accept payment based on the previous year turnover. May not.
Yeah.
So we count as a figure for the previous year, yes?
Yeah.
But only the good thing is one return. Then the next we're looking now, second scheme, we have a cash accounting. Again, we have a same limit, 1.3. Cash accounting mean you only count the VAT if you receive the money, actually receive the money cash, yes? Then you pay to
Yeah.
HMRC. Otherwise, you don't need to pay HMRC. When you pay, when you receive. So there is nothing, so everything we not deal with the credit facility. If you are on this scheme, if the customer pay you, you pay to HMRC. If the customer don't pay you, you don't pay them, which is a good thing, yes?
Yeah.
Useful, there is a long period credit given to customer, automatically bad debt relief. If the customer not pay you, you don't pay to HMRC. In other scheme, you pay to HMRC, then you refund it if somebody don't pay you later date, which is a totally different, yes?
Yeah.
So it's a good, but it's a limit is, so it's a small businesses. It's not a big businesses can be because their turnover can be more. Okay, flat rate. Flat rate is a scheme where business can calculate VAT by applying the flat rate. We're not looking input output VAT here. We're just looking output how much worth of it, and we can register. But there is a turnover is a 1.5 million and sorry is 150,000, yes, and we can register on this scheme up to 230,000. This is excluding VAT and including VAT, yes.
Yeah.
And this is a simple administration, don't need to deal with the VAT on the purchases, can lead to be less VAT payable, and discount 1% given in the first year registration. HMRC can give us further discount as well. Disadvantage, cannot be reclaimed VAT on purchases and expenses. You only paying the flat rate on turnover, and even is included the zero rated and exempt. Yes, even exempt supply you also include in your turnover. More sometimes is a more VAT you have to pay to HMRC, because normally we pay 20%, will go for 10%. This different sort of the goods, the different rate. So maybe they say you pay 8% flat rate, yes, but you need to include all the exempt, all the zero rated, everything in your turnover. So we need to look around what sort of the goods really we sell. Is it advantage? That's why here come the consultant give us advice. Yes, tax planning. Okay, ethics. We discuss about ethics. We need to be follow. We need to tell the truth. Yes. So we need always professional behavior, always integrity. We should be objective, not biased. We keep the confidential record. We should be professionally competent and due care, up to date knowledge. These are all ethics, any accounting body you have to follow. Any question?
No, this is perfectly fine.
Okay, reclaiming input tax, we said we can claim input, and we can claim on the cars and the van. Input tax can't be reclaim on the purchase of the van, purchase of the car, because we can claim the allowance, like the first year allowance, because this is a capital asset, yes. So that's why we not claim under the VAT, we can claim under the allowance, but the fuel we can claim, yes.
Yeah, sure, you can claim.
Yes, insurance we can claim, no doubt. If we paid VAT on insurance, insurance expense we can claim in under the personal tax or corporation tax. But fuel VAT on fuel, if we paid, we can claim it. Yes.
Okay.
So capital item.
I did the previous slide. If if there's any private use, then you can increase the amount payable to HMRC.
Yes, for private use, we're not supposed to claim. Only for business.
So it is only for business, not for private use.
No.
Okay.
Okay, the capital items, we know the capital asset. Yes.
Yeah.
Okay, next now partially exemptions. Some can be partially exempt. A business, it makes some taxable and some exempt. Yes. Some taxable, some exempt. Exempt mean no tax on it. Yes.
Yeah.
Taxable supply and exempt. Taxable is mean you pay the tax, and the exempt mean you don't. So VAT attribute the taxable supply input VAT relating to the whole of the taxable supplies is fully recoverable. Yes.
Yeah.
But the VAT on the exempt supply input relating wholly to exempt supply may be recovered. May be recovered. There is a de-minimized limit, £650 worth of the goods. If it's more, we can't claim it.
Okay.
So that's only de-minimized. Yes. All input is recoverable. In the total input, VAT attribute exempt supply is below than the de-minimized limit. So outside EU we call export. Outside EU we call imports. Yes. But within EU, if we're selling between countries, we call dispatches and acquisition. And if the both party registered in the EU country, we don't need to pay the VAT each other. We can cross out. You pay me, you refund it, I will refund it. So there is a no VAT involved. Yes. But if it's outside EU, we need to follow the rules internationally. Yes. That's why will be a lot of work after, because we are outside Brexit now, or going to be outside. So that will be increased VAT now. That's why people get the expensive goods. The price likely will go up if we don't have a trade agreement in place between EU and the UK.
So I've been wondering about Brexit. Is Brexit a bad thing for UK or a good thing for UK?
It's quite political. In some sector can be good, in some sector can be, because UK used to pay 36 billion to EU every year for the sake of membership.
Okay.
And the people used to be free movement, and a lot of people used to claim the benefit. Yes. But on the trading, we not used to pay any VAT, and they not used to be. So here we need to look around. Do we have more import? Do we have more export? Yes. So we used to deal, but because some countries some are the developed country, their people not really claiming any benefit from the UK. But the EU also give the funding and the rebates to many sectors in the UK as well. So it was good to be live in, but maybe some culturally or other value in the long run can be UK. The population segment can be changed, and like a lot of immigrants to be in EU countries. When they become national local, they all will maybe move to the in the UK, because English speaking country only one.
Okay.
So that's some cultural issues. So people just vote in their favor. So it's arguable. We'll see. Yeah. So keeping in view of the record. Yes, that's a record keeping. That's administrative. We need to keep the record of sale day book, purchase day book, purchase return, VAT control account, all. We need to keep the record of, yes, which VAT scheme we are, what rate we paid. All this we need to keep the record. If we don't keep record, we can't claim the, yes, HMRC can ask us. And six years plus the current year. So total 7 years we need to keep the record. Any question?
No, this is fine.
Okay, 3.3, calculate the VAT and the liability given. So we can claim and we can calculate, yes. So when we calculate, we need to look all the invoices, all the quantities what we have, and we can fill the pro forma, yes, which we'll go through in the further slides. Any question?
Okay, so you're given data, and using the data you have to calculate the VAT.
Yes.
What exactly is VAT tax, VAT liability?
So in next slide, I'll show you the VAT pro forma. We need to fill the form, yes. Whatever the data will be given, and in assignment we will be given data, yes.
Okay.
So discount, we know the discount. We know trade discount, we know settlement discount. What is the difference between them?
Trade discount and settlement. I have studied this, yes, but I'm afraid to say I've forgotten the
Trade discount at the time of the purchase, if any discount you've been given as a trader, that call you don't need to be included in your invoice really, yeah. You can show it, but it's not compulsory. Settlement discount, if you pay within certain days, you will get discount, yes.
Yeah.
So you're not supposed to pay VAT, or we're not supposed to charge. Bad debt relief, if you don't pay, if our customer don't pay us, so if the debt is more than 6 months old, we can claim it, yes. If we paid the VAT earlier to HMRC, we can claim back, yes, we can make adjustment.
Okay.
Okay, VAT account, we know the VAT, we have a debit side, credit side, like a control accounts, yes, where we can find the balance of VAT, which we'll go through. This is called VAT return, okay. Thus in UK we use the form to be submit the VAT. VAT due in the period of the sales. If we have any sales, we paid the VAT, we record in the box 1. If we have a VAT on the acquisition mean purchases, if we paid it, yes, so we can add in box 2. So box 1 plus box 2 equal to box 3, yes?
Yeah.
In the VAT. Then in the box 4 is the VAT on purchases if we paid any VAT, yes? Other than including EU as well, huh? So we can enter in the box 4. Then the difference between box 3 and 4 is equal to box 5. That's my net liability, how much I need to pay or how much I need to refund from HMRC.
Okay.
Box 6 is your total value of sales excluding VAT, yes?
Okay.
If is a point, you need to write in the whole numbers here, whole pound.
Okay.
Total value of purchases, how many worth of the goods you purchase other than EU, yes?
Okay.
Then in box 8, total purchase from EU and then total sales from EU. That's all, 8 and 9. All these boxes you need. That is a VAT return form. So if we've been given the data, VAT and the sales, yes, so we carry on filling accordingly. That's all we need to. That's called VAT return.
Understood.
Okay, then this is all about being explained, VAT return. Then VAT return and the payment due. 1 month and 7 days following the end of the VAT return period. So payment is due 1 month and 7 days.
Okay.
Payment due, electronic payment we can online, yes, return date, and we can pay by direct debit as well. Okay, next we have 3. We'll see a few returns. I'll show you. 3.4 is about discuss the VAT penalties. What is the penalties meant by? Is meant by what penalties we need to pay if you don't submit the return. If we don't submit the return, yes, it can be penalty due to the careless and deliberately error. Deliberately we missing the figure, we're not including. Inaccurate return, failure to keep record, and failure to register. In these cases can be penalties. Failure to reclaiming input VAT, understating figures, false obtaining bad relief. I'm saying you declare yourself bankrupt, so I'll say I can claim VAT. Huh? Tax avoidance in avoidance, yes, which we discussed. Penalties, yes. Minor cases, how much can be. So we've been given method 1, next VAT return. If we have errors is no more than 10,000, we can make adjustment in the next VAT return. Or 1% of turnover and not deliberately, yes? There is a no penalty. If in the method 2, if the error is more than 50,000, exceeded 1% of turnover, and is more or deliberately error relating to an accounting period ended 4 years ago, yes? Then we need to be declared it, yes?
Yeah.
And we've been given the VAT return. This is the video, and that's all about, the penalties and VAT return if we don't submit it. So what we can do, we can copy the links, yes?
Yeah.
VAT general ledger accounts complete with entries relating to
We've been given all, huh?
March 31.
So we've been given how much is the VAT we supposed to? Yes? What is the net VAT we have?
Sorry, I can't see the video.
Oh, sorry.
To this,
Yes?
add the VAT
So you can submit it. This is the return we are filling now, huh?
from the credit side of the VAT account.
Yeah.
Yes? So you will see there, yes, how much is. So this is a good to watch, huh? So what goes in the box 1, box 2, box 3, yes?
Yeah. Okay.
So please just, So I'll copy one more link which we'll go through in assignment as well when we'll discuss this afternoon assignment. Huh? Do you have assignment brief?
Yeah, I have the assignment brief.
Is it Raman send you assignment brief?
I'll just open it.
Okay, no problem. So we have a lesson 2 o'clock, which is we'll go through assignment brief, yes?
Yeah.
And then we'll discuss assignment brief, and within it, we'll. And if you want to be, I'll try to copy here one more link for you. ATHE.
Yes.
And if you want to do a bit practice about, or you want to learn more about the VAT,
Yeah.
I'm going to copy the link for you. Within my slide, we have a test, at the end you can say I'm right or wrong. Huh? So answer will come automatically, yes? So that's all.
Okay.
So I'm copying this link here. Yes, it shows, it take you from start to end, VAT return. Huh? So like here, you can pick the box, yes? Like here, we can't, you can say I'm right or wrong. Huh? So can you see, yes?
Yeah, I can see that.
So that's the way you can, if we, sorry, I'm not really read it. So if you look there, so that will help you.
Okay. So by multiple choice questions, I can get better.
Yes. So that's, that will help you to clear the concept. Annual scheme, we've been given in the box 1, we've been given, the tax point, we've been given what sort of the, maybe you don't need to really memorize it, but the sake of, your interest.
Can also do some multiple choice questions from A6 state.
Yes, you can.
Okay.
Okay, so that's, all. Even in F6, multiple choice as well is the same. Quite similar. So that's all today and up to now, and in the next lesson we'll discuss assignment brief. If you don't mind me to send me, can you send me the assignment brief as well, which Raman send you?
Okay, I will send it to your email then.
Yes, please. If you send me on my email, then I'll go through it, and we'll be approximately 2 o'clock. We'll be online again.
Okay. Okay. Fine.
Okay. Thanks. Bye bye. Speak to you then.
Bye bye.
Thanks for attending. So today we cover our LO3, and LO3 was about calculate the VAT and complete the VAT return, which I copied the links for you as well, and further we'll go through during our assignment. brief discussion, and we'll look around, what sort of the task we have in assignment brief, and we'll try to address all our learning outcome within assignment brief as well. If any question, drop the email, and I'll try my best to get back to you as soon as possible. Thanks for attending, and speak to you soon.
The email is Anjum Satar at UK Versity.
Yep, that's fine. You can send that.